You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
All right, everybody, that music means it is Tuesday. That means it's time once again for an interview here on the old Options Insider Radio Network. This is, of course, the portion of the network, the portion of our programming we welcome on guests from throughout the world of options and derivatives and proceed to pick their brains for the benefit of you, the listener. And next up is an old friend of the network, even though he hasn't been on in quite some time. So let's catch up with him. He is Ivan Brown, the head of options over there at NYSE. Ivan, welcome back to the Options Insider Radio program.
Thank you very much, Mark. It's great to be here.
Well, Ivan, I'm not sure if you noticed, but since the last time you and I chatted, which I believe was over a year ago, back down at the last OIC conference, a little bit has changed. The world has kind of fallen apart since the last time we chatted. So we should make sure to do this more often just to prevent future disasters, sir.
That would be great. If that's the answer, then I'm all for it.
That's what it is. This interview show is the catalyst for all of those things. But joking aside, let's get into it there. Obviously, it's been a tumultuous 6 months or so for everyone, the exchange included. You guys have had to deal with quite a few sucker punches coming at you out of left field. Of course, we had the pandemic kicking off back in the February-March timeframe, everyone transitioning into working remotely. The options market, for the first time in its history, transitioning to 100% electronic activity. I mean, it was just a series of unprecedented events, one after the other. Then, of course, trying to transition those trading floors back in some capacity and doing it in a safe and responsible manner. So you guys have had a lot on your plate since the last time we chatted. So catch us up and walk our listeners through what those last few months, what they've been like dealing with all these different curveballs coming at you one after the other.
Yeah, let me just first start off by saying, I hope you and your family and all the Options Insider Radio family is all healthy and well. It's been an interesting time for everyone, both personally and professionally. So just hope everyone's healthy and well.
I appreciate that. We are doing well, but these are fun times here in Chicago yet again. So as I'm sure they are in New York.
No, I hear you. Absolutely. Well, I mean, I think, generally speaking, we're all students of the market in one way or another. So it's a pretty fascinating time just to study all the different sort of market structure dynamics, coming into play. Of course, you're right. Sort of one of the more sort of eventful, situations that we were managing through, at least in the end of Q1, was in the height of sort of the elevated volatility dynamic. We made the decision to temporarily close our equity and options trading floors in San Francisco and New York, just as we were sort of recalibrating and getting our, a better understanding as COVID-19 was unfolding. Certainly. That's not a decision that we take lightly, considering that those businesses are an important part of what we do. We believe in what the floor volume accomplishes and the value that it adds to the ecosystem. And so, we paid very close attention to how the market was evolving and certainly how COVID was evolving, since that was an incredibly fluid and dynamic situation that's still in our midst in a very real and significant way. And so, we worked very closely with local, state, and federal authorities who were very helpful in collaborating with us and ensuring when it made sense to temporarily close, we did. And when it made sense to open, we did. And so, it was really about a thoughtful evaluation of what the sort of local conditions were on the ground to make sure that we could open safely and responsibly to ensure ultimately the health of our trading floor community and staff. And so it happened to be that the local conditions in California were a little bit further ahead than where they were in New York in early May. And it gave us the opportunity to take a leadership position in thinking about how do we reopen the trading floor. And part of that is, things that probably would make sense to you in terms of sort of a low density footprint with, social distancing and a variety of health screening and protocols in place to ensure we could operate safely. And so we did that with the ARCA options trading floor in early May, followed by the New York options, Amex options trading floor, and the New York equity floor at the end of May. So in terms of operationally, all of that has gone smoothly and well. It's been a really good collaborative effort between the exchange and membership in ensuring that we learn and evolve together. And of course, the full offering is now back in place. I just say that certainly we were very pleased with what we saw in terms of the market performance under all electronic trading. But we were also very encouraged to offer the sort of full complement and choice when we have, the full service offering available when the floors are opening. So, we think of open outcry as a crucial mechanism for sort of executing the institutional sized complex transactions, which benefit from huge judgment. And so we're happy to have them back open.
New additions to the options market and maybe newer listeners here in our audience may wonder, what's the big deal? I talk about it all the time here, how the industry went 100% electronic for the first time. I've been trading electronically for ages, they might say. What's the big deal? And yet, this is unprecedented. This has never been done before. This is an industry that was born from open outcry. This was legacy pit products, some of which had never traded electronically really in a substantial portion of their capacity. Now all of that, just flipping a switch and going 100% electronic. I was prepared personally, Ivan, maybe you were as well. I'd be curious to get your take. I thought this was going to be just riddled with disasters, outages, missed trades, all sorts of crazy things, crazy prints going up. I thought it was going to be a bit of a disaster. And what turned out to be, extremely high volume times, times the industry has really never seen before from a volume perspective. And this 100% electronic environment pretty much kept up for the most part. I was stunned. I was flabbergasted. Were you as stunned as I was? Maybe I'm just deeply cynical having done this for a while. Maybe you were a more optimistic person by nature, Ivan. Did this surprise you as well, that the electronic environment was able to keep pace with all the madness that was going on over the past few months?
Yeah, there's quite a bit to unpack there. I would say certainly, from a macro point of view, we build capacity and resiliency and BCP to envision various types of our operation being interrupted in one way or another, and to ensure that we have smooth operations. At the same time, if you were to say, what is I to envision that the temporary closure was to continue for as long as it did, that's certainly without precedent. But it's interesting. I think that generally speaking, the options markets performed admirably throughout the time period because, of course, as we talked about, we had volatility, at sort of record levels going throughout March and into April, and yet the systems were highly resilient and they performed well. And I think, that in and of itself is a positive reflection on the exchanges, on the broker dealers, on the routers generally, because, at the end of the day, the resiliency is the most important in terms of driving confidence, which drives engagement, right? And so there's a positive effect that all of that creates. At the same time, it's kind of interesting because, there are a couple of other factors happening, right? So it wasn't just that trading floors were temporarily closed. It was also that the vast majority of the U.S. workforce transitioned to remote work. And so I think when you take a look at sort of what we have defined as kind of institutional sized volume, if that was roughly 10% of the marketplace on a multi-list basis prior to sort of the temporary closure of the trading floors, now that we're back open, that institutional volume is roughly running at around 60% of its pre-COVID level, or pre-trading floor closure level rather. And so I think that's an interesting reflection of another dynamic, which is that, remote work and things of that nature also influence sort of the risk tolerance and the way in which people are trading in the marketplace. So, there is that piece on the institutional side, but then when you look at sort of the level of retail engagement, that's rather unprecedented. I mean, if you kind of look at sort of macro level 2020, prior to this year, we had never had a multi-list volume day that exceeded 40 million contracts. And so far this year, we've surpassed that threshold 4 times. And taking it back a step even further, 8 of the top 10 multi-listed volume days in the entire history of the existence of the options industry occurred in the first 6 months of this year. So when you think about it from that perspective, it's just there's a complexion change as well, while at the same time we're sort of at these record volume levels.
This record volume, it brings to mind back in the beginning of 2019, it was coming off the heels of another record volume year, which is, of course, 2018, which was precipitated by a lot of, shall we say, not exactly great events like the VIX-mageddon of February 2018 and all that other fun stuff. And people were asking us at the beginning of that year, what will it take to really exceed that volume, that record volume of 2018. And I remember saying at the time, maybe be careful what you wish for. I'm not sure if society is ready for what it would take to generate a lot more volume than we saw in 2018. And fast forward to this year, and certainly a little bit of be careful what you wish for out there, which is never a good thing. Options volume is good, maybe the lens through which we're all getting it these days. Perhaps not the way we envisioned it. But I want to go back to something you touched on earlier, because we were discussing just the challenges in general of having to navigate all of this. But you mentioned, of course, you're having to do this remotely now. So this would have been challenging in a normal environment if you were all together in the office handling this massive explosion of volume and volatility. But now you're all doing this effectively scattered to the 4 winds, dialing in from your DSL in your basement, maybe with your kids climbing all over you. So a little bit of a different environment in which to manage all this and all this team, Ivan. So walk us through that and what some of the challenges that posed to navigating all this remotely in this otherwise insane and tumultuous environment.
Yeah, I mean, I think those dynamics are not unique to us, right? I mean, I think each and every day, there are new demands on us, both, personally and professionally, where someone is now a teacher in addition to, a full-time job. And so there's a lot of different sort of dynamics, playing out. But I would say is that, I'm incredibly proud of what the team at NYSE has done in terms of transitioning so smoothly to remote work. And, effectively, in a series of days, winding down, temporarily the trading floors and operating seamlessly remotely. And so, I think a lot of credit goes to our technology teams for allowing us to have the bandwidth and the tools in place, collaborative or otherwise, to make that possible. I certainly spend a lot more time these days on the Microsoft Teams and other collaboration tools than I have in many years past, although I do more things face-to-face in some respects, even though it's virtually these days. So, although I'm sure that's probably something that you found as well.
Yeah, well, we live in this virtual environment here, so for us it's been a boon. It's not the environment anyone wanted to drive traffic to our network, but c'est la vie. It's one of the few silver linings of a global pandemic. People are at home. They're concerned about the markets. They're finding their way to our network in ever-increasing numbers. And we're happy to keep them engaged, informed. Maybe sometimes we try to keep them a little bit entertained. Not sure how much we succeed on that all the time, but we try. We endeavor to, at the very least. Now, we're hearing whispers and rumors from the local exchanges here in Chicago, Ivan, about keeping an eye, of course, on the infection rates and perhaps having some backup plans in place in case they have to go back to fully electronic. Is this something that you and your team are talking about as well? And are you monitoring the infection levels there in New York? So in case, no one wants to go back to that, but in case we do have to go back to the shutting down the floor, is this something you guys have put in place there as well?
Yeah, no, I think that's a very fair assessment. The primary concern at the end of the day is ensuring the health and safety of our trading floor community, and so that's something that we're constantly monitoring local conditions on the ground to make sure that we are also evolving in terms of what best guidance is, both medically and otherwise, to ensure that we're operating in the best possible fashion that we can. Certainly one would hope that we don't have to revisit those types of temporary closures, but we feel well prepared in the event that we were to have to do that, that we have a good operating procedure in place to deal with those things.
Now, of course, we're talking about the resumption of open outcry here in the COVID-19 pandemic. Obviously, the traditional breakdown for electronic versus open outcry is that the larger, more complex, more intricate paper tends to go up on the open outcry setting. Those kind of customers, they like that high-touch execution. Sometimes the orders are a little bit more complex. They need a little bit of nuance and hand-holding from the broker. That's just facilitated by that open outcry environment. And it was interesting to see what happened to that paper during the all-electronic era, where it went, how they put it up, and maybe some of those players sitting on the sidelines. Have you heard from some of those players now that you're back in open outcry, Ivan, that they were maybe sitting on the sidelines, they were holding on to some of their paper, maybe not wanting to put it up in an electronic environment, and now that we're back, of course, now that the pits are back in this type of capacity, are you seeing that flow return? Are you seeing that traditional type of flow going into the pits, or maybe are you seeing some type of new orders evolve and new customers trying out this open outcry now that it's back in this new type of COVID-sensitive form, Ivan?
Yeah, I mean, I think there are a couple of things there. Certainly when the trading floors were temporarily closed, we saw a fairly, appreciable uptick in the level of order flow that went through auction mechanisms, particularly for those in large size orders. And that persisted while the trading floors were temporarily closed. And then after the trading floors started to reopen, we saw those large institutional size orders move back towards the trading floor. And I think that's generally a reflection to what you highlighted, which is, the benefit and discretion that human judgment can provide when handling large size sort of institutional and complex transactions. At the same time, though, when you look at sort of the macro environment, that level of institutional volume is not at the sort of pre-floor closure full strength, right? So if you look at the quote unquote institutional volume universe as sort of reported by OPRA trade codes, that was roughly 10% of the market prior to the closure and is roughly, 5 to 6% of the market, now that we've resumed opening. And that's less of a reflection of open outcry. I think it's more a reflection of kind of the remote work posture and other types of dynamics unfolding there, because, the preference for outcry as an execution vehicle, I think, was validated when we saw some of those temporary upticks in electronic execution vehicles shift back down to sort of their pre-closure levels as the floor transitioned and reopened. So I think, that's an interesting dynamic there. Of course, then at the same time, you have this sort of retail growth that's occurring simultaneously, and that is not necessarily as predicated on remote work posture, and in fact, it might be enhanced by it as folks are having more time to study the market and express opinions in the marketplace.
Well, obviously, there's been a lot of surprises and curveballs during this pandemic era. I mentioned earlier how surprised I was that the electronic markets held up as well as they did to this tsunami of volume. You just touched on this explosion of retail paper that we've seen in the marketplace over the last few months. I'm curious for you, Ivan, what stands out? What was maybe one of the biggest surprises or takeaways you saw as this pandemic era has evolved?
Well, I guess it's a couple of things. When you think about, to your point on the resiliency side of things, I don't know if many people know, but one of NYSE's subsidiaries operates the OPRA, the OPRA plant for the consolidated options industry. And when I think about sort of the level of messaging that we handled in a single day, for example, at the end of February, we handled over 100 billion messages in a single day, which is more than double the prior single day record historically. So when you think about just sort of like the magnitude of message traffic that we saw and that the industry is collectively digesting, that's a positive reflection. But sort of like when you kind of write that number out and see the commas and zeros, it's just a reflection of like what the magnitude of that is. So I think that's one thing. We've also seen how efficient the marketplace is, right? As we collectively have transitioned, to a temporary closure and then reopening, everything unfolded very smoothly, and that's what the reflection of kind of what we're doing at NYSE, but also my colleagues and contemporaries at other exchanges and across the options ecosystem. And so I think, that's good as well. When we talk about the retail engagement, that's an encouraging development as people become better educated on the options product and the appropriate use cases for expressing various investment theses. So I think that's encouraging. And hopefully, this results in a next generation of participants that are engaged in the marketplace, and that becomes a universe of people to continue to sort of advance, what we're doing here in the options world. So, I think those are certainly a couple of positive developments coming out of these last couple of months.
Let's take a break from the pandemic stuff. I'm sure our audience can certainly use a break as well. Let's talk about some products. The last time you were on, Ivan, you taught us about this new product you guys were launching, these Fang Plus index options. It's been a little while since we've had a chance to check up on those. So let's dive into that a little bit. Catch our listeners up, maybe if they missed your recent appearance, aren't familiar with these products. I think the name is kind of self-explanatory, but give us a little bit of an overview of what these products are and how has the volume been in these products over the past few months, Ivan?
Yeah, so just very quickly, we have the Fang Plus index, which is a concept that an index that was conceived by my colleagues here at ICE, and that's an equal-weighted index among the top 10 sort of leaders of the technology and applied technology space. So the typical stocks that you would think of, the Facebooks, Apples, and Googles, but with others as well, like Alibaba and Tesla. And it's been, if you look at sort of the performance of the index relative to others, it's vastly outperformed, as one could imagine, as we see sort of the performance in technology stocks more broadly. And so we have created a suite of tradable products based off of the Fang Plus index, both a future and also an option that's traded on our Amex and ARCA options platforms. And so I think like with anything with a new product, it's an ecosystem that you have to build up simultaneously. And so we're encouraged to continue to see folks engaged in the space and are certainly, pleased by what we're seeing from sort of the trajectory of the index because it allows people to express a more pure point of view just given the fact that it's an equal weighting amongst those 10 stocks as opposed to a lot of other indices which tend to be market cap considered, and that results in different kinds of potential distortions that those create. So that's kind of what's up with Fang Plus in a nutshell.
I can't imagine a better time for it, Ivan. I can't remember the last time our audience was this engaged with all things Fang, the way they've outperformed pretty much everything over the past 6 months. And you said this volume is still growing. You're building the ecosystem, but what kind of numbers have you guys been seeing out there so far?
Oh, then it's a slow but steady process with any time with a new product, right? Because you're steadily building up an ecosystem across different channels. And for us right now, the focus is on building open interest, so that way folks can continue to engage and transact in a way where there's liquidity. So we've been focusing on building out sort of liquidity programs to encourage liquidity providers to be active in the space. And so we're starting to see that unfold. I would say, volumes continue to be, in the early stages of where we're sort of more focused again on developing more open interest across the lines versus sort of aggregate volume yet. And I think in time that comes as you continue to invest in the ecosystem.
I noticed you guys have just jumped on the bite-sized trend as well. That's been a trend that's been just devouring the option space, pun intended, out there for a while. Everything moving to smaller duration, smaller size type contracts. Look at the success of the micro futures over there at CME. I think it took the entire industry by surprise how much people are into those. I see you guys are following suit now with the Fang. You're cutting down that multiplier. Is that correct, Ivan?
On the future side, yes, that's correct. The options is still the 100 standard multiplier. But I think, to the point that you highlighted before, there's been such appreciation in the price of these securities. I think, you try and strike the right balance between affording efficiency of notional control, while at the same time making these products digestible and accessible to as broad a universe of constituents as possible. And so that's really the thought behind it. In many ways, you sort of see a similar thesis unfolding as folks consider stock splits and things of that nature, which we obviously are seeing in some of the in some of the higher priced equity securities these days. So I think it's a similar reflection of trying to broaden the addressable universe of folks that can be appealing, can appeal to the product.
Speaking of hot products, another product category that is hot again these days, at least from the exchange perspective, is, of course, all things volatility. Cboe, of course, has the VIX complex and all the various flavors and iterations therein. MIAX has the Spikes product, which is more of a SPY multiple-listed version of the VIX. We're seeing NASDAQ and CME now announcing this joint venture into the VolQ, which is a former ISE product going back many years over there with the nations here. So obviously this complex getting a little hot again, Ivan. I'm curious, any plans over there at NYSE to dive into the volatility fray anytime soon, sir?
It's an interesting question. Certainly can't comment on what my contemporaries are thinking at other exchanges. But from our perspective, we're trying to find where are there opportunities to add value to the ecosystem, and where are there unmet needs or underserved constituents from a product point of view, and trying to strike the right balance there, whether it's volatility or exposure to the Fang marketplace, et cetera. And so, it's a constant conversation thinking about how things have evolved. And of course, as we've sort of discussed for the last few minutes, there are a lot of other things that are shifting simultaneously. And, I think the majority of our time right now has been spent more on are there features and functions in place that are serving as broad an ecosystem of the options community as possible? And what are the lessons learned about what went well and what could be improved upon from an industry point of view while the floors were temporarily closed and reopened, et cetera? And so I think that's more the lens of our focus in more recent days. And of course, as we've discussed in the past, one of the things that's, we're spending a great deal of our time on now is Pillar for Options, which is our next generation trading system. So the bulk of our time is thinking about, okay, how do we build this new next generation trading platform that operates, our 5 equities markets, and transition that over to options. So that's where the lion's share of our energy is being applied, certainly in the second half of 2020.
Whenever I have exchanges on, I always like to delve into the more educational side, because that's an area of the space that is certainly near and dear to our hearts, and certainly near and dear to a lot of our audience. We like talking the sophisticated things as well, the volatility space, the sophisticated systems, but there's still a core audience out there that needs the basic introductory, the basic hand-holding information that pretty much all of the exchanges used to provide. Back in the day, they used to be pretty much in some sort of educational arm and outlet at every exchange. Fast forward to 2020, a lot of the exchanges have offloaded that to OIC. They do a great job over there, but they're only really, at the end of the day, a handful of people over there trying to do all of the educational heavy lifting for the entire industry. It's a big ask for just that one entity. So I'm curious, Ivan, you guys have a lot of different options exchanges over there. What are you guys doing over there at NYSE and Amex to maybe try to go beyond that a little bit and try to spread the educational mantra for options beyond just what you guys do with OIC?
Yeah, I think OIC does a wonderful job in terms of engaging end users about the various applications of options. So, they deserve a lot of credit. I think the other side of it, though, is as technology and other applications have changed, so is the way in which we consume and digest, information and educate ourselves. And so a lot of credit, I think, also goes to the retail community and brokerage firms who have spent an incredible amount of time tailoring education to their customers. And, whether it's leveraging AI in order to deliver more tailored education based upon sort of the trading interests or portfolio, et cetera, of an individual retail customer, those folks are coming up with some really thoughtful ways of engaging sort of a broader community of folks. And I think, we do that from the perspective of client and customer appreciation events and delve more into sort of the market structure applications of things. But I think that, the retail community has done a really great job of sort of cascading that message more broadly. At the same time, we also leverage, social media channels these days, et cetera, and may pick a topic to sort of focus on. Perfect example being Fang Plus or things of that nature, to sort of educate folks about how to think about the utility of these products. And so, that's kind of how we're thinking about it. But certainly, I've been really impressed with what I've seen coming out of sort of the retail brokerage community in terms of how they're engaging their end users. And I think that's ultimately reflected in some of the volume results we've seen over the last couple of months.
Well, Ivan, that music means we've come to the end of our little sojourn here on Options Insider Radio Network. But of course, I'd like to leave them wanting a little bit more, maybe leave them looking forward ahead a little bit, looking forward to something a little bit exciting. So let's do that, Ivan. Before we go, why don't you give our audience a little bit of a hint, a little bit of a tease of what they can expect coming down the pike from you guys over there at NYSE Options in the coming months, sir?
So, thank you again, Mark, for the time. It's always been great to catch up. I hope everyone continues to stay healthy and well. I would say from our perspective, we are 100% focused and committed to Pillar for Options. And so, we're going to be working tirelessly behind the scenes over the next 12 months to make sure that we are building the features and functions that continue to give our clients the choice of how they execute on our platform. And ultimately, that's going to get reflected in second half of next year as we launch our first options market onto Pillar. So really look forward to doing that and look forward to coming back on the show when we can talk about more things and how the industry's evolved over the next handful of months.
Yes, and hopefully, Ivan, the next time we chat, there won't be some global cataclysm, global pandemic that's wreaking havoc on all of our world. So I'm glad you could join us, and I'm glad all of you out there could join us as well for this edition of Options Insider Radio. Stay tuned throughout the week. More content coming at you, of course. Tomorrow, the 100th episode of Options Bootcamp. Tune in for that one. Should be a fun extravaganza. OPR will be hitting you tomorrow, too. Thursday, of course, This Week in Futures Options, and, of course, Option Block, and Friday, Volatility View. So a lot in store for you all the way through back to Monday and again to next Tuesday for more Options Insider Radio.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.